integrating actual costing with advanced forecasting and budgeting techniques. As organizations seek to enhance their financial planning and decision-making capabilities, the integration of actual costing data with advanced forecasting and budgeting techniques has become increasingly crucial. By leveraging the granular, real-time cost information provided by actual costing, businesses can develop more accurate, responsive, and strategically aligned financial plans and budgets. The limitations of traditional budgeting and forecasting. Traditional budgeting and forecasting approaches, which often rely on standard or historical cost data, can fall short in providing the necessary insights to navigate the complexities of today's business environment. Standard costs, based on predetermined estimates or past performance, may not adequately reflect the true, dynamic nature of an organization's costs. This mismatch between standard and actual costs can lead to several challenges. Inaccurate financial projections. Budgets and forecasts built on standard cost estimates may fail to accurately predict an organization's future financial performance, resulting in suboptimal decision-making. Reduced responsiveness. The rigidity of traditional budgeting and forecasting processes can hinder an organization's ability to quickly adapt to changing market conditions, cost fluctuation, or new strategic priorities. Distorted performance evaluation. Variances between standard and actual costs can obscure the true drivers of an organization's financial performance, making it difficult to identify areas for improvement or optimization. Misalignment with strategic goals. If budgets and forecasts do not accurately reflect the organization's true cost structure, they may fail to support the achievement of strategic objectives, such as profitability targets or cost reduction initiatives. The power of integrating actual costing with advanced techniques. By integrating actual costing data with advanced forecasting and budgeting methods, organizations can overcome the limitations of traditional approaches and unlock more robust, responsive, and strategically aligned financial planning capabilities. Scenario planning and sensitivity analysis. Actual costing data can be leveraged to inform scenario planning and sensitivity analysis, enabling organizations to model the financial impact of various costs, demand, or market conditions. This allows for the development of contingency plans and the identification of potential risks and opportunities. Rolling forecasts. Actual costing data can be used to create rolling forecasts, where financial projections are frequently updated to reflect the latest costs and operational realities. This approach enhances an organization's agility in responding to changing circumstances and supports more informed decision-making. Zero-based budgeting. Actual costing data can form the foundation for zero-based budgeting, where budgets are built from the ground up based on the organization's current cost structure and strategic priorities, rather than relying on historical spending patterns. Driver-based budgeting. Actual costing data can help identify the key cost drivers within an organization, enabling the development of driver-based budgets that are more closely aligned with the underlying operational realities. Profitability analysis. By integrating actual costing data with advanced analytics, organizations can perform more detailed and accurate profitability analysis at the product, customer, or business unit level, informing strategic decisions about pricing, product mix, and resource allocation. Variance analysis and root cause identification. The granular actual cost data can enable more robust variance analysis, allowing organizations to quickly identify the root causes of cost fluctuation and take corrective actions to improve financial performance. Implementing the integration of actual costing and advanced techniques. To effectively integrate actual costing data with advanced forecasting and budgeting techniques, organizations should consider the following steps. Establish a comprehensive actual costing system. Ensure that the organization has a robust and accurate actual costing system in place, capable of capturing and reporting real-time cost data at a granular level. Integrate actual costing with financial planning and analysis systems. Seamlessly integrate the actual costing data with the organization's FP and a software, such as budgeting, forecasting, and reporting tools to enable the flow of cost information into financial planning processes. Develop cross-functional collaboration. Foster collaboration between the finance, accounting, and operational teams to ensure that the actual costing data is properly interpreted, align with strategic objectives, and effectively utilized in financial planning and decision-making. Invest in advanced analytics and modeling capabilities. Equip the organization with the necessary tools and skills to leverage advanced analytics, such as scenario planning, sensitivity analysis, and predictive modeling to extract maximum value from the actual costing data. Implement flexible budgeting and forecasting processes. Adopt more agile and responsive budgeting and forecasting approaches, such as rolling forecasts and zero-based budgeting, to keep pace with the dynamic nature of costs and market conditions. Continuously monitor and refine the integrated system, regularly review the integration of actual costing with advanced forecasting and budgeting techniques, identify areas for improvement, and make necessary adjustments to ensure the ongoing effectiveness and relevance of the financial planning processes. Case study: integrating actual costing with rolling forecasts at a manufacturing company. ABC Manufacturing, a leading producer of industrial equipment, recognized the limitations of its traditional budgeting and forecasting practices, which relied heavily on standard cost data. The company decided to implement a comprehensive integration of its actual costing system with a rolling forecast approach to enhance its financial planning and decision-making capabilities. By seamlessly integrating the actual cost data from its ERP system with a specialized FP and a software platform, ABC Manufacturing was able to create real-time, driver-based rolling forecasts. These forecasts incorporated the latest insights on material prices, labor rates, and other key cost factors, enabling the company to quickly adapt its financial plans in response to changing market conditions. The integration of actual costing data also allowed ABC Manufacturing to perform more detailed profitability analysis, identifying the true cost to serve for each of its product lines and customer segments. This information, in turn, informed strategic decisions about pricing, product mix, and resource allocation, ultimately contributing to a 12% improvement in the company's overall profit margins. Furthermore, the ability to rapidly analyze cost variances and their root causes, enabled by the integration of actual costing and rolling forecasts, allowed ABC Manufacturing to be more agile in addressing operational inefficiencies and implementing corrective actions. This enhanced responsiveness resulted in a 9% reduction in the company's overall manufacturing costs. The success of this initiative was largely attributable to the strong collaboration between the finance, accounting, and operations teams at ABC Manufacturing. By fostering a shared understanding of the value of integrating actual costing with advanced forecasting techniques, the company was able to overcome cultural and technological challenges and unlock the full potential of this strategic integration. Overcoming challenges in the integration of actual costing and advanced techniques. While the benefits of integrating actual costing with advanced forecasting and budgeting techniques are well documented, organizations may face several challenges in implementing and maintaining an effective integrated system. Data integration and interoperability, ensuring seamless data integration between the actual costing system, the FP in a software, and other enterprise systems can be a complex and resource-intensive endeavor. Data quality and governance, maintaining the accuracy, completeness, and reliability of the actual cost data used in financial planning and analysis is crucial but can be challenging, especially as the volume and sources of data increase. Talent and skill development, effectively leveraging the integration of actual costing and advanced forecasting. Budgeting techniques require specialized skills in data analytics, financial modeling, and change management. Upskilling the existing workforce or attracting the necessary talent can be a significant challenge. Change management and cultural adoption, transitioning from traditional budgeting and forecasting practices to a more data-driven, actual costing-based approach may face resistance from employees accustomed to the old methods. Effective change management and a focus on fostering a culture of data-informed decision-making are crucial. Technology constraints and limitation, the capabilities of the organization's existing FP and a software, and the integration with the actual costing system may pose technical limitations that need to be addressed through system upgrades, customizations, or the adoption of new technology solutions. To overcome these challenges, organizations must take a comprehensive and strategic approach to the integration of actual costing and advanced forecasting, budgeting techniques. This may involve the development of robust data management strategies, the investment in cross-functional training and talent development programs, and the implementation of effective change management protocols. Conclusion: the integration of actual costing data with advanced forecasting and budgeting techniques is a powerful strategic lever that can significantly enhance an organization's financial planning and decision-making capabilities. By leveraging the granular, real-time cost information provided by actual costing, businesses can develop more accurate, responsive, and strategically aligned financial plans and budgets, ultimately improving their overall financial performance and competitiveness. As organizations navigate the complexities of today's business environment, the strategic role of this integration will only become more crucial. By embracing this approach and overcoming the associated challenges, companies can position themselves for long-term success and maintain a competitive edge in their respective industries.